Imagine a world where your money works for you, where the clink of coins in your pocket is replaced by the sweet sound of dividends hitting your account. Picture a reality where financial freedom isn't just an idea, but a tangible goal. Welcome to Master Wealth, where we believe this dream is within your reach. We understand that retiring comfortably means different things to different people. There are countless financial scenarios to consider. Some may explore reverse mortgages, selling off possessions, or moving to a more affordable location. But there's another option that often gets overlooked: living on investment dividends. It's a path that can help you earn up to $2,900 a month. Stick around because we're about to reveal 3 fast ways to make that dream come true. The secret sauce. So, what's the secret sauce for determining your ideal investment amount? It all comes down to your desired lifestyle and the numbers that make it possible. The average person spends around $67,000 a year, but that might not be the right benchmark for you. You can adjust based on your specific needs, aspirations, and level of comfort. Now, let's add a touch of intrigue. Imagine a life where your investments generate a consistent income stream, allowing you to enjoy the fruits of your labor without touching your principal. It's like having a secret money tree that keeps growing and providing for you with passive dividends. The possibilities become enticing. Remember, this journey is about finding the balance that aligns with your dreams. Take a moment to picture your future and visualize the kind of life you want to lead. Then let the numbers guide you towards the investment amount that'll make dividends your ticket to financial freedom. Before we dive into the strategies, let's take a moment to understand dividends and how they work. Imagine being a part owner of a company, owning some of its stock. When that company makes a profit, they have choices on what to do with it. They can use the profit to grow the company or give it to their owners, in this case, shareholders like you. If a company decides to distribute some of its profit to shareholders, it's called dividends. As a shareholder, you'll receive a portion of that profit based on how many shares you own. Dividends can be given as cash, either through a digital deposit or a check, or they can be reinvested in more shares of the company's stock. Companies have different schedules for paying dividends, but many do it every 3 months. Now, let's talk about dividend yield. This is a way to measure how much you're earning from dividends compared to the price of the stock. It can vary from company to company and even change for the same company over time. Generally, more established companies offer higher dividend yields than smaller, newer ones. To calculate dividend yield, you take the annual dividends per share and divide it by the price per share. For example, if your stock is priced at $100 per share and you receive $10 in dividends each year, your dividend yield would be 10%. Understanding dividend yield helps you evaluate your investment. You can compare different stock prices and make smart decisions based on your goals and how much risk you're willing to take. By investing in dividend-paying stocks, you have the potential to earn regular income without needing to sell your shares. This means you can enjoy a steady stream of money while still keeping your investment intact. Now, let's explore 3 strategies to achieve your financial goals through dividends. One of the quickest paths to living off dividends is by investing in covered call ETFs. These unique funds offer investors the opportunity to earn income from both stock appreciation and dividend payments. How does it work? The ETF invests in stock and also writes call options on those same stocks to generate additional income. Call options give the buyer the rights, but not the obligation, to buy a stock at a specific price within a certain time frame. When the ETF sells call options on the stocks in its portfolio, it receives premium income that is paid out as dividends. Moreover, if the stock price rises above the call option's strike price, the ETF may realize capital gains because it'll be required to sell those stocks. There are several popular covered call ETFs to consider, such as XYLD, OYLK, and EWZ. These funds offer attractive yields, often in the double digits, which are significantly higher than the yields in many traditional dividend stocks. Let's take a look at their 12-month trailing yields. XYLD has a yield of 11.83%. OYLK has a yield of 11.82%. EWZ has a yield of 11.81%. The beauty of these ETFs lies in their ability to provide income from both dividends and option premiums, resulting in a more stable and reliable stream of passive income. However, it's essential to understand that these ETFs come with some risks. For instance, options may expire worthless or stock prices may decline, impacting the overall performance. Now, let's apply this strategy to your journey. If you aim to earn $2,900 per month, which equates to $35,000 per year, through covered call ETFs, we can adjust the figures accordingly. Based on the current yield levels, you would need an investment ranging from approximately $280,000 to $310,000. That's quite appealing, especially when compared to traditional dividend stocks, where you would need around $2 million invested to achieve the same level of income. By choosing covered call ETFs, you can reach your financial goal of earning $35,000 per year or $2,900 per month without needing an excessive investment. This strategy offers an opportunity to generate a steady income stream while minimizing the capital required. So, if you're eager to embark on this path, you can explore covered call ETFs as a means to fulfill your dreams of living off dividends and enjoying financial independence. Another way to earn $35,000 per year or $2,900 per month through dividends is by investing in real estate investment trusts, REITs. REITs are like teams that invest in real estate properties like malls, offices, and apartments. These teams make money from these properties and share some of it with the people who invest in them. For you, there are some great REITs to consider if you want to earn passive income from dividends. These include Two Harbors Investment Corporation with a dividend yield of 20.3%, Brandywine Realty Trust with a dividend yield of 19.9%, and Orchid Island Capital Incorporated offering a dividend yield of 19.4%. These REITs have a track record of providing their investors with a consistent income stream through dividends. Historically, REITs have shown solid performance with an average annual return of 10.8% over the past 20 years. This means that investing in REITs can be a smart way to potentially grow your wealth while earning a steady income. It's important to know that the amount of money you get from REITs can go up and down because it depends on how many people rent the properties and how the economy is doing. While REITs can give you more money than regular stocks, they can also be risky when the economy is not doing well. So, how much do you need to invest to earn $35,000 per year from REITs? If you expect to get around 10.8% each year, you would need to invest about $320,000. But this number can change depending on whether you choose to put your money in different REITs or just one. A good way for you to retire with the REITs is to save and invest a certain amount of money every week and let the dividends add up until you reach your goal. If you stay committed and patient, you could become financially independent in about 5 to 7 years. When investing for dividends, it's important for you to have a plan. You need to know how much money you need and what you want to achieve. This will help you choose the best REITs for your portfolio and make sure you stick to your plan over time. Everyone's situation is different, so you might find that you can live happily with less than $35,000 per year, or you might need more if you have a family or certain lifestyle preferences. One great thing about REITs is that, unlike regular stocks, they often pay dividends every month. This makes them an even more attractive choice for people who want a steady income from the stock market. By considering the strategy of investing in REITs, you can achieve your financial goals of earning $35,000 per year or $2,900 per month from dividends. It's a strategy that could turn your dream of living off dividends into a reality. Dividend Aristocrats, your path to consistent returns. Dividend Aristocrats are special stocks that belong to a group of companies in the S&P 500 index. These stocks have a unique record of increasing their dividend payments to shareholders for at least 25 years in a row. They're considered great options for people who want to earn income from their investments. Some of the top Dividend Aristocrats are 3M, Leggett & Platt, and Walgreens Boots Alliance. These corporations, on average, pay close to a 7% dividend yield, which is lower than covered call ETFs and REITs, but they are very consistent in paying out those dividends. Dividend Aristocrats are known for consistently raising dividends year after year. To be part of this group, a company must have increased its dividend payout for at least 25 consecutive years. Whether it's a good idea to invest in these stocks depends on your own goals, timeline, and how much risk you're comfortable with. The companies that make up the Dividend Aristocrats come from different industries, but they share some common traits. Apart from raising dividends regularly, they are well-established companies that have shown growth over time. They're usually big companies that are less likely to be bought out by other companies. They also tend to perform better during tough economic times, which helps them generate consistent profits. So, how much do you have to invest to meet your goal of $2,900 per month with a 7% dividend yield? You would need to invest about $500,000. While this may be a substantial investment compared to traditional dividend stocks, where you would need an investment of $2 million, this is just a fraction for the same payout. A good idea for you is to spread your investments across multiple Dividend Aristocrats to reduce risk. By investing in Dividend Aristocrats, you have the potential to receive regular income from your investments. These stocks have a strong track record of increasing dividends, and their inclusion in the S&P 500 index adds credibility to their performance. So, unsure where to find investment potential for generating income? Continue watching our video for the top 7 monthly dividend ETFs to earn income fast and track your dividend income goals with expert and easy guidance. In conclusion, achieving financial freedom through dividends is not a distant dream. It's a tangible reality within your grasp. Master Wealth has shown you 3 proven strategies to earn a consistent income stream and make your money work for you. We've covered call ETFs, high-yield REITs, and Dividend Aristocrats as effective paths to financial independence. Now, we invite you to take action and begin your journey towards financial freedom. By implementing these strategies and staying committed to your goals, you can turn your dream of living off dividends into a reality. But remember, it all starts with the right investments and a solid plan. If you've enjoyed this video and found it valuable, don't forget to hit the like button and subscribe to our channel for more content that will help you on your path to financial success. Your support keeps us going, and we're here to provide you with the knowledge and insights you need to master your wealth. Thank you for watching, and we look forward to guiding you on your journey to financial freedom. Cheers!